now for a look at the latest business news and a new investigation into the world's biggest tech companies that has been launched in the United States. To tell us more about that, we're joined by our business editor, Stephen Carroll. Stephen.
Eve, big tech's been facing more scrutiny on both sides of the Atlantic in recent months. This time around, it's the Federal Trade Commission in the United States. It's looking into the smaller companies that have been bought up by big names over the last decade, those which were too small to be officially reported under competition law. Now, the US antitrust regulator wants to know if those tech groups bought startups in a way that may have been anti-competitive. Their investigation will look at all acquisitions made by Google's parent company, Alphabet, Amazon, Apple, Facebook and Microsoft over a period of 10 years. The FTC wants to see the information relating to how and why these startups were bought. It's just the latest investigation by the FTC into these major companies amid calls from some Democratic presidential candidates to break them up. Meanwhile, an EU court is to start hearing Google's appeal against a €2.4 billion fine from the European Commission. The penalty was handed down in 2017 after the Commission found Google had unfairly promoted its shopping service in search results. The EU's General Court will hear appeal arguments over the next 3 days. This is just one of the several major fines the EU has hit Google with in recent years. Now, we were talking yesterday about how those attending the Singapore Air Show are being advised not to shake hands over fears of spreading the coronavirus. It's a big concern too for organisers of the Mobile World Congress in Barcelona later this month. A number of companies have dropped out due to concerns over the virus, as Alison Sargent now reports.
It's the mobile industry's biggest trade show, but this year over a dozen major companies are opting out. Amazon, Facebook, Ericsson and Intel among the names to withdraw from the event, each citing the coronavirus outbreak. Organizers say they're taking all necessary safety precautions, including restrictions on people who have recently been to China.
And we're also discussing to have a no handshake policy. and that might sound funny, but it is sort of for people to understand that it's okay. We're not being rude if we don't want to shake your hand or hug each other or whatever. It's so perfectly okay just to say hi or namaste or whatever you want to say.
This year's focus is set to be the rollout of 5th generation or 5G mobile technology. Chinese tech giant Huawei is among the market leaders, although the US has been pressuring allies not to accept it as a supplier. For now, Huawei still plans to attend the conference and could dominate the spotlight if fewer rivals are present. Meanwhile, analysts say the virus could impact China's deployment of its own 5G networks.
The Chinese government, of course, are putting a lot of effort into ramping out 5G network infrastructure. And so if their attention is moved towards containing the coronavirus, for example, we may see that infrastructure rollout happen a bit later.
Even if the Congress goes forward, low turnout could have an economic impact on host city Barcelona. Some hotels have already been reporting cancellations.
Markets today, Asian shares ticking up again in trading in Asia. Investors hoping that the worst of the coronavirus may be over at this stage. Still gains across the board there. Hong Kong shares hitting a 3-week high in trading earlier, up by 1% on the Hang Seng in Hong Kong. On the currency markets, euro's trading for $1.09 and just over 84 pence sterling as well. Now, January was another grim month for Boeing, which failed to secure any new orders over the month. That's the first time that's happened since 1962. It's after its biggest seller, the 737 MAX plane, was grounded almost a year ago over safety concerns. The crisis has boosted Boeing's European rival Airbus, though, which posted its biggest number of orders in 15 years. The ride-hailing firm Lyft says it doesn't expect to turn a profit until 2022. That's despite quarterly revenues passing $1 billion for the first time at the end of 2019. Shares in the company, which is Uber's biggest rival in the United States, fell by more than 5% in after-hours trading on Wall Street. And finally for me, a lingerie brand backed by the singer Rihanna has come under fire for apparently using deceptive marketing practices. The consumer group Truth in Advertising has complained to the US Federal Trade Commission that the brand is ensnaring consumers into unwanted monthly charges. It says when a customer tries to buy something from the Savage X Fenty site, they're automatically signed up to a subscription service for $50 a month. Now, the company says those accusations are false and that believes strongly in transparency, which may or may not be a good thing when you're talking about a lingerie company.
Good point, Stephen. I hadn't seen it like that. Stephen Carroll there with our business update.